Hello dear traders, let us review the major economic events of the past week. The US dollar index tumbled last week and US stocks edged lower. The main reason was the unexpectedly weak US labor market data for May released on Friday. They were of such importance that markets shrugged off other economic news of the week. This May, the increase in non-farm payrolls were the smallest since September 2010 at 38,000, far below the anticipated 160,000. The US unemployment decreased to 4.7%, its lowest since November 2007. This did not support investors' optimism, as data suggests that some discouraged Americans have stopped searching for jobs. The Fed funds futures priced in only 4% chance for the rate hike on June 15, the data showed on Friday, down from 21% on Thursday. The chances for July rate hike fell to 38% from 60%. The muted reaction of US stock market indices to the news was a marginal decline. Weaker national currency may support the US exports. The possible delay in Fed rate hike will mean longer period of low borrowing costs. In our opinion, the weak corporate earnings data for first quarter 2016 weighed on US stock indices. The total earnings of S&P 500 components fell 5%, while the index is traded at the same price-to-earnings ratio of 17.1. This is about 20% above the average price-to-earnings ratio for the last 5 years. Among other important developments was the release of May manufacturing PMI in China, which came out last Wednesday surprisingly higher than expected. Together with other factors and weaker US dollar, the data triggered a surge in almost all commodity futures last week. This week, significant economic data will come out in US on Thursday and Friday, when the wholesale inventories for April and consumer sentiment index by Michigan University for June will be released. These were the most significant events of the past week. Happy trading and see you next week.